The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we started a little differently today, folks. We posted a chart of this bobcat that Sarah took pictures of yesterday. It's from our neighbor's backyard, and he roams the neighborhood. We saw him here about a couple weeks ago walking around, and he's really a sight to see. He's 45 pounds. What's interesting, if you'll notice that wall that he's sitting on under the tree, that's about 5.5 feet high. He makes that jump like you and I are taking a first step. So he's quite agile. Anyway, he doesn't bother anything other than small animals. So far, so good. Years ago, we used to see javelina and deer and stuff in the neighborhood quite often, and I've had a mountain lion on my roof once. It was in the neighborhood, but the bobcats are they're still around. Let's take a look here at this DAX. As you can see, we've completed a 3 drive to a bottom pattern now on the hourly chart. We haven't gone down yet. We just gone sideways for a little bit, but that is a 3 drive pattern on that hourly chart. Now, if we take a look at the DAX, you're not seeing the picture nearly as clearly, and that's been the strongest of the two on this recent bounce. We've gone from 68.50 up to 73.20. We are making an ABCD pattern there, and that is a 3 drive pattern over the last 4 days trading. It's pretty much spot on from high to high, and high to high is equal, and the ABCD pattern is there. And you also have the ABCD pattern is there, but the CD leg is a multiple of 1.414, which is the reciprocal of the reciprocal of the square root of 2, which was one of Nikola Tesla's favorite ratios. Okay, let's take a quick look at something that a lot of things are happening, folks. If you like Fibonacci numbers, this is your kind of day. So let's just take a quick look. First of all, we're going to talk a little bit about the NASDAQ yesterday, because we hit a number from our good friend here in the den. Little Dudette is in there talking about the NASDAQ yesterday. We hit that spot on 61% retracement within 2 points of the NASDAQ. We've only come off about 35 or 40 points since then, but that was absolutely a spot on perfect ratio. So we need to pay, really close attention to that one. It's very, very important. Another one that is very, very important. Now let's just get it up here so we can take a quick look at it, and that is the silver market. I just wanted to bring this up to you because we're seeing a divergence here between the silver and the gold. If you'll notice that the 1.618 expansion of the move over the last 6 weeks came in today at 1735, and that has been the high. I don't know if that's going to hold it or not, but that is an ABCD and a 1.618 expansion. If you'll take some time and study this hourly silver chart and go back to see how many other times some of these ratios have told us that there's some selling coming in, I think it would behoove you, because even though they don't work all the time, they work some of the time, and that is one of the key things that I think is, very, very important as we look at some of these things here today. Now, I wanted to bring to your attention also, hopefully, if I can find it here, I just did the chart on it and shut the front door and raised the rent. It has disappeared. And that's not it, and that's not it. I'll have to do it at the break, but boy, we've got, wow, how could that happen? Oh, no, that's not it either. Doggone it, I've got to get this chart up here because you really got to see it. Give me a second here, folks. This is so important. I have to do this one. So just give me 1 second here. I have it in my. There we go. Just give me a second. This is. This is one we just can't wait on because this is really important. Well, yeah, that's important to me, probably not to you. Let's get up here and take a look at this. This is platinum, folks. This is what's interesting here. You'll notice in the platinum, we made that low down there at the 78% level back on April the 9th. Look what's happened so far. We've made an ABCD pattern that we completed about 3 hours ago in the platinum at the 957 level. We're now trading $13 below that level. That is not a good sign because that completed a perfect ABCD pattern at the 382 at the same time as the silver is making the 1.618 expansion at 1735. To me, if you follow Fibonacci numbers, that's something that should be very important. So that's what we're watching today. Now, any move above that 960 per ounce level in the platinum would certainly be very, very bullish, and any move above the 1745 level would be very bullish on the silver. Gold is still lagging. We talked about that yesterday. We showed the chart that it was making a Gartley up there at the 1358 level. We're now trading at 1359, so it's still setting at that same level. So we need to be very, very, very careful on these metals today because they should start a correction, and we want to be able to see what that next pullback is going to be in the platinum and also in the gold and the silver. So those are just the numbers that we're looking at. Yesterday, when we were chatting, we talked about the possibility of the crude oil. We were watching crude oil very, very closely because of the fact that we were setting at an area where we were getting ready to go up and test the $69 to $70 per barrel level in the crude. You'll notice this is where we were yesterday after we had made the 382 retracement. We saw that 382 retracement in the platinum this morning, and that was on the downside. This one's on the upside, and this fits in with what we've been looking at in crude oil. Is we're expecting this high to come in somewhere in crude, somewhere around this $69 a barrel level. Let's just get it up here so we can see it. This is from the newsletter that we send out over the weekend. And we're looking for that to come in. The high so far, I believe, has been 69.20, I believe, and I'm not even sure where it is now. That has completed that ABCD. That is also a 3 drive from February 22nd. If you'll go and look at that, the symmetry is not quite perfect, but the ABCD structure certainly is, and we're right at the 1.27 of the whole range in February. So 69 and change should be something that would be, I would think, be very, very important in crude oil to be watching today. Let's take a quick look and see where we are. We're at 69.10 right now, so we want to be watching that one very, very closely also. We've got a little break coming up here, and when we get done, I would like to walk through 2 particular things that I think we'll enjoy seeing. Well, I enjoy seeing them. Is the Treasury bond market. I'm going to go through that, and then I also want to go through the British pound because we focused on that in the newsletter over the weekend, and it's starting to act like we thought it would. And of course, the bonds still are, but we want to cover both bonds and the Treasury British pound when we come back from our break. So 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we'll be right, folks. I posted the chart of the Treasury bonds. I just wanted to walk through what we're looking at here in Treasury bonds. Let's just take a quick look. I'll do the I will send you the sugar in just a second. Let's go through the Treasury bonds because it's a situation where we have, uh-oh, something's wrong. Okay, let's hold on here 1 second here. I don't know if there is, there's no more bacon, folks. They don't trade pork bellies anymore. They quit that a long time ago. I hated to see that. I always enjoyed trading bellies, but that's neither here nor there. But if you can look at this Treasury bond chart for just a minute, I wanted to walk through you what's been happening since this bottom has been made or this chart is in. Now, this is the 4-hour chart in the Treasury bonds, and as you come up and see this, after we made that 61% retracement, you can see that we had the rally, and what we're doing now is we're completing the second ABCD pattern. That first one came in at 44.20. We rallied up to the 146 level. That was a perfect 61% retracement. That sets up the next ABCD pattern that goes from 147 down to 144. You know, 3.5 points. You take 46, 3.5 points. It takes you down to 43.24, which will be the 78% level. Folks, this is one of the most bearish charts I've seen in a very long time. If you stop and think where we are in Treasury bonds, look where we were on February the 21st. From February the 21st until April the 29th, the market rallied from 142 to 147. That's 5 handles. Boys and girls, on a long-term basis, on a long-term chart, when you take a look at that, that happens to be a very, very bearish pattern. If you look at it on the longer term pattern, we want to see it here for just a second. Yes, it is. You're right, Marshall. It is a spot 135 pattern. Good work. And so we'll see what's going to be happening here. But you had an equal rally during October and November, exactly the same as we had during February and April. I don't know what else you can do. It stopped at the 382 retracement and is now heading down. Folks, below 142, that sets up an ABCD structure that takes you to 129. That's going to take the 30-year bond to a little over almost 4%. And when it gets to 4%, it's going to light up some candles there at the corner of Wall and Broad. That's my opinion anyway. What the dollar index will be doing at that time, I'm not sure, but it certainly looks like we are very bearish in these Treasury bonds, even though we've had some nice bounces. If you consider, 3 or 4 points in a market that moves 15 points a bounce, that's a very close to a dead cat bounce, in my opinion. So watch it. We'll see what's going on here. I firmly believe that we've got the situation coming where we have a situation that we're going to see higher inflation coming in here very shortly, because that's the only way we can take care of this $20 trillion debt that we have, that we owe to China with the Treasury bonds and Treasury notes, is they'll monetize it. But we'll see. Okay, now we're going to see sugar the sweet. Let's get it up here and take a look at it. We'll get okay, there we are. This is we're at the very last support here in the sugar down here at this 1189 level. We made a new low today, but we're doing the same type of situation in sugar that I believe that we did in coffee. And if you remember, we were watching coffee very, very close this week too, and I hope we've got it. Here it is. Just one second. There's the coffee, and you'll see what happened after we had the bottom in coffee, cleaned everything out, and then it had the big rally, of roughly, 3-4 points. But that could be a classic fake out of a double bottom, much like we saw in the dollar index when it first hit 87, 88, and then quickly turned. So that's what we're watching in the coffee, in the cocoa and coffee and sugar. Now, someone's also asked me about the cocoa. I'll have to refer to the newsletter here. We'll get up here a little bit, but we were looking for cocoa. Has had a pretty good run here. If you remember, that's the one that Mr. Z talked to us about in cocoa back on January. I think it was January 8th, right around Elvis's birthday. You'll notice that we were down at that 1845 level, and of course it went all the way up to that level of 26 and change. Now, Mr. Z told us that he got out at 23, which is still a tremendous run. But if we get this next run up here in cocoa somewhere above that 26, 27 level, that's going to be a 3 drive to a top pattern very nicely. As a matter of fact, someone is telling me that the cocoa might even be up there right now. So we'll have to see what's going to be happening here. So we'll look at this very closely as we go through this. Now, the next one that I wanted to cover is the British pound, because we focused on that one also in the newsletter this past week, and I think it's important, that we look at this on 2 ways to watch it. The first way we're going to watch it, of course, is we want to look at it on the very, very long term, because this was one of for last year, the British pound was our highest winner on any one trade that we had. We sold that at just right at right a tad under 150. And we covered it down around the 130 level. Of course, it went a lot lower, but you notice when we made that Brexit high back in June the 27th of 2016, it was making a near perfect 61% retracement, a 1.27 ABCD pattern, and this is the weekly. So you can see that it had a huge move. But then since that time, as it went down, you'll notice it had the second ABCD correction there during August. Then that dropped another 14 points, and then we started to bottom. And as you can see, we made those bottoms. We made an ABCD on the weekly. It backed off quite a bit. It went from 130 down to 126, and then it made another one, and then another one, and this is where we are now. So this is at an extremely key level because we took out the highs of January by about a hair's breadth. I mean, it was almost nothing. We'll show you that on the daily. But when we did that, we didn't quite get to that 144 level. We got to 143.76, taking out the high of January at the 78% level, and then we've turned down. We're already down 200 points from that level. So that's where it helps to take a look at some of these things. Somebody could give me the last price of that cocoa, please. That's I have cocoa on my mind. Anyway, I would like to know what that is, but I'm going to put up the chart of the British pound so you can see it on the daily basis and how it did this, because it's very interesting how we took out that high of January by just a little bit, and then we'll be able to see, whoa, wow, that's really a big move. Let's get that cocoa chart up and take a quick look at it here, because that's going to be, I want to see it because I'm not in cocoa. I'm just interested in the technical picture of it, so just bear with me here. We've only got a few minutes before our break here. We'll look at it right after the break. 877-927-6648.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're going to take a look at this hot chocolate, also known as cocoa. And if you will look at it, we were looking for the market to go up and make a three-drive pattern. And as you can see, we had an explosive move that just absolutely had one of the biggest ranges of the whole contract here. And boy, whenever you see that really wide-ranging bar, folks, if there was ever a danger sign in trading with pattern recognition, that's it. There are two major danger signs when you trade pattern recognition. One is that really wide-ranging bar, and the second one, of course, is the gap. Both of those are very, very important because, you know, you don't know what is out there, but it's very, very important. It tells you that somebody that knows a whole lot more than you is buying cocoa. And so just keep that in mind. Or selling, the same thing on the downside. We've seen both of those things occur. So watch those wide-ranging bars and gaps. Those are the two big danger signals in pattern recognition trading without any even doubt about it. So this it's in no man's land right now. You'd have to go to a weekly chart, and we don't have time to do that. But let's get on to some of the things that we do like to talk about here. One of the things that we were looking at this week, if you remember when we were looking at it on an astrological basis, of course, was the wheat market. We were watching it very, very closely here this week because we had a spot where we thought it was going to come down to. We'll bring it up here so you can take a look at it. You'll be able to see, look out for wide-ranging bars and gaps. Anyway, you'll notice that we hit the exact 61% retracement down there at 518. The low was 517 3/4, and we've had a very strong rally in wheat since that time. I want to bring this up to show you that we're almost up to the 61% retracement. That has rallied more than 15 cents a bushel, folks, which is $750, and of course your risk was around $300. So you've just about tripled what your original risk was. So if you're in that, you certainly want to move your stop to the break-even point, or to be able to, to protect some of your profit. Now, what's interesting about the wheat that someone was asking, and that is you were in an uptrend, folks. If you notice, you had higher bottoms. They were coming in at really nice 61% retracement, so you were buying a dip into a really nice, friendly market, it appeared. And so that's a very important concept to remember, because when you're trading some of these things, the hardest thing to do is to try to pick a top in something like, for example, cocoa. I mean, I wouldn't even begin to even try to do that today with that wide-ranging bar. You don't have to. Wait a few days. It'll show what it's going to do. I don't think there's any rush to get into it, because remember, not having a position is a position because you're using patience. That's the main thing that you want to to keep in mind as you're doing these things. Now, as we start the day this morning, one of the things that I want to do is I want to double check just to see how the market is reacting here this morning, to all the things that are going down. And we've had a pretty nice rally of about 70 points now in the Dow Jones. The bonds are still coming down. We've just completed that second ABCD pattern, and we should go a lot lower because of that wide-ranging bar. It appears that we should go at least to the 143.15 level today, and possibly, a whole lot worse. So keep in mind that it's going to be really interesting to watch these bonds unfold to the downside, because people just do not see the bearishness in these bonds, and I think it's very, very important. We've got gold trading at the 13.51 level. It's doing absolutely nothing. Platinum is still off $12 off its high. Silver's down a little bit from its high, so we'll see what's going on. I mentioned several times about, hold on one second here, I'm just about ready to make the cash register ring here. Hold on. Just one second here. Give me a second here, folks. Excuse me. Wow. Sorry. Another one that we want to watch, since we were talking about the crude oil, is the fact that we have this situation going on in the hold on a second. Yeah, I'm multitasking. You're right, Dudette. I'm certainly doing that. Hold on here. If you'll put up here the heating oil chart, you'll be waiting for a double top in that. Now, heating oil has not even taken out the high of Monday, folks. That's a sign that there's some weakness in the heating oil versus the crude oil, because crude oil went up and made a high of $1 a barrel higher than the old high, and yet you could not do it in the heating oil. So, you know, the rules say that you should sell the weakest contract if you're going to be a short seller and buy the strongest, and that's the main thing that you want to be watching as you're looking at some of these things. Okay, we've had a request here from one of our listeners. Hold on here to take a look at Big Blue, also known as International Business Machines, IBM. Let me get this up here. I always like IBM. That was the only job offer I didn't get when I was in college. Of course, my specialty, well, my degree was in pharmacy stuff, but they were looking for guys for software, and I took a test, and they said it's the worst score we've ever had. Anyway, look at this ABCD patterns, folks. If you don't like ABCD, you ought to revisit it, because it's got some nice ones here, especially the one we had in January. You had the beautiful ABCD. Gartley said to sell the first ABCD pattern in a bear market. That was the first one. And now what we did yesterday, we had the earnings come out, but that market was setting right at the 61% retracement at the 162 level, and has since held that, and is now heading down. The ABCD structure on IBM on this one here, from the high we made in 2017, we dropped well over 50 points. So if you subtract 50 points from the high we just made back in January at 170, that takes you down to 120. And if you subtract the $30 from the one we made up at 162, takes you down to 125. So 125 to 130 is what it's looking like on this larger ABCD pattern in here. So we'll see what's going to happen in this level. We'll be taking a quick look here at the Treasury bonds once again. Folks, the Treasury bonds have a little bit of support down in here, but with the strength that we're having to the downside, I really would have a hard time entering on that ABCD structure, at least till we get down to the 78% level, which is down to 143 and change. And I believe we got another 10 pips to go to the downside on that. And then I would be able to look at, folks, when I say pips, that's the old foreign exchange in me. A pip means percentage in price, and that's the same as a tick. A tick is each value that you have. So I interchange those, but that's what you're looking for. About 143. If it gets below that 143.22, it's going to have some serious problems. I don't know where it's trading at right now, but it should be getting pretty close to that 143 level as we look at it. 128. Okay, that we're as long as you can stay above that 122 level, it's got a slight chance, and the emphasis there is on slight. So let's take a break. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we want to take a quick look at this Treasury bond chart that we're looking at here. Folks, this is basically what we're watching here at this level at 143.22. That's the 78% level that we're looking at. We're trading at 143.28 right now. The low's been 143.25, but we're coming down so sharply that it is one of those situations where you're looking at a possible danger sign. So if you're willing to buy there, that's certainly possible. But if you do, I would use a very close stop. You're trading a contract that's well worth over $100,000. So I would not risk more than $300 or 12 ticks. 10 ticks on that particular trade, because coming down is it's very, very sharp. We're there right now. We're within 2 ticks of the exact 78% level. So watch it closely. But with that strong bar there you have there, I would be a little bit hesitant. And believe me, it doesn't take much for me to pull the trigger. But when I see that wide-ranging bar there, I want to be a little bit careful. Now, if you stay here for an hour, half hour, say a half hour, that tells you that there's some buying coming in, so that's going to be a little bit helpful. But right now, that knife is falling, and you don't get extra credit for catching a falling knife. There's just, you just don't do that. So kind of pay attention to that as you're watching that. Now, we've had a request to take a look at the cattle contract that we've been watching for quite some time. Give me 1 second and I'll get it up here so we can take a look at it, because we've got a very interesting pattern unfolding now in the cattle. Just I've got to move one line out of the way. There we go. Bada bing, bada boom. Here we go. Let's get this up here so we can see it. Oh, I can do that without that. Here we go. Here's the August cattle. And we'll be able to see. That's it. It's not a bad trade down here in the Treasury bonds. The only thing it's got negative against it is this long, wide-ranging bar. And one other thing is the longer-term trend is down so much. So frankly, if you were short, I would certainly be taking off some shorts here, but I certainly wouldn't, be too aggressive for the long side. Now, if we take a look at the August cattle contract, we made that big 1.27 expansion. That was down during the tariff scare, and I'm beginning to believe that's all it was. Then you had a really strong rally. Fortunately, our good friend Mr. Z was talking about that in the den that day, and it went from, I believe, almost limit down to limit up that day, which is a huge amount, and continued to go. It backed off to a 38% retracement, and that tells us that we could be getting to look at that 108 level, which is where the old lows were back in December. So that'll be an interesting one to watch as we look at cattle down the road here. But some of this stuff related to the tariffs, I believe, was way overdone. But again, that's just my opinion as we see these things unfolding. Another question about the gold. Would I be buying gold here? Absolutely not. I mean, I just did the chart on the platinum. That's if I didn't see it, I don't trade platinum, but the fact that my alerts went off in the middle of the night at the exact 38% level at the 957 level, and we're trading substantially below that already. There was a lot of selling that came into platinum. That was a perfect ABCD at a 382 retracement after a major bottom. You had to put a gun to my head, which I hope you wouldn't. It would tell me that I would rather be to the short side of silver, gold, and platinum, just by the patterns. Now, remember, it has nothing to do with the fundamentals. I know you're hearing in the news about China buying all kind of metals and loading up, but China's traders are very, very smart, folks. They tell you what you want to hear, not what they want to hear. So be careful. I've been following the Chinese traders for 50 years, and they're expert grain traders, and I'm sure they do everything else. They've been cashing in on our mistakes for many, many years. So they certainly know the trading environment, extremely well. So pay close attention to that. I think it's important that we watch that. Okay, we have another question, and that is about, hold on one second, let me get it up here, and that is about this Japanese yen. We'll get it up here. We're almost at that level that we talked about over the weekend in the newsletter. It does look great on your chart, but if you look at silver on a situation of ABCD, it doesn't look that great. I mean, it really doesn't. It's completing all the patterns up here, and that's not a good sign. Look at this. Look at this silver chart. If you like ABCD, hey Peak, if you don't like ABCD, then don't worry about it. But we made an exact 1.618 expansion over the last 6 weeks to the tick. And the last time we did it at 1.27, the market broke 80 cents. So I'm expecting a pullback. Now, I want to be buying gold on this next pullback because I really think we're getting ready to break out of gold on a longer-term basis. But let's get to this Japanese yen. You see, we were waiting for that ABCD pattern to occur in the Japanese yen, and that's another one that is at a smaller ratio. It's down to the 382 level, but that 108 level should be some pretty strong resistance in that Japanese yen. And so far that has held it. But whether it's going to be helpful or not, we'll have to wait and see. So let's keep it in mind that that's where we are as we look at some of these things unfold here for the day. So just watch that on the Japanese yen. The British pound, we've already gone through that. The euro, we've covered that several times, and the key to that euro is right here, and that's on this long-term weekly chart, because we are spot on at a 382 and 61% retracement up there at 126. We're now trading at 123 and change, and if we ever get above that, boy, look out, because it could really go. And that's the key level, 88 in the dollar index, because if that happens, you're going to see some really big moves coming in my opinion, because that would be a go sign for Europe and the euro. But I don't know if that's going to happen or not. Right now, the dollar index still looks like it's relatively bullish. So we have to keep in mind that that's what we're watching. Someone's asked me where I would buy gold. Where I would like to buy gold and where gold would like for me to buy gold are very, very far apart. I'd like to see a $35 drop in gold down to about $13.15 or even $12.85, and then I would call up the old Widows and Orphans Sister Mary Perpetual's orphanage and tell them to load it up. But I don't know if we're going to get there or not. All I feel strongly about is that number we hit today in platinum. You can write that down on a piece of paper and keep it for a while, because if we get above that 958 level in platinum, it's going to be on its way. And if we get silver above that 1750, it will be on its way. Now, silver was really bullish above that. We talked about that in the newsletter quite a bit, about how bullish it was. And let's just put this up here, because this is what we sent out, and it was spot on, and you'll be able to look at it. The gold-silver ratio, let's just pull this up and take a look at it. Our friend Mr. Z, we'll take a break here, but I'll put the ratio up so you can take a look at it. We're still right there, folks. We're right at that top at 82.5.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Take a little look here at the crude oil. This is the hourly chart that we kind of follow. This is an expansion of what we looked at yesterday, where we had the 382 retracement, and then we've had the rally up. But what's important here is if you'll look at the top of the page where the high was made, you'll notice that the three ratios that are coming together, all within about 20 cents in the crude oil. You have two 1.618 ratios and a 1.27, and they came in, absolutely spot on. We're trading down around the 68.90 level right now. That's only 40 cents off the high, but there's a possibility that could be something very, very important. And when you add to that the fact that the heating oil has been lagging very, very badly, and that would be another one that would be indicative of a potential pretty good correction here in the crude oil market. Someone's also asked a question about the IBM, the price level that we came up with. Folks, like Jim Twentyman says, defy human nature, do the work yourself, because this is so simple. Let's just put this up so you can just do it real easy for yourself, is to just go in and measure the ABCD patterns that we had from the 2017 high in February up around 185. You came down to 140, and then you rallied up to 170. Measure that ABCD and figure it out where it is yourself, because if you start to see these and prove to yourself that they work some of the time, they don't work all of the time, but when they do work, you've got something that you can hang your hat on, and that's something that you'd be looking at pretty good. Yes, you're right. It looks pretty good until it doesn't. That's absolutely true. Keep in mind, we're going to be doing a webinar next week with Jim Bartolioni on the 24th. That's going to be a splash hit, I'm sure. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!